You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time once again for TWIFO, This Week in Futures Options, a program where the name pretty much says it all. We get into the week that was and still is on the futures options side of the fence. Maybe you want to talk some rates, wouldn't be offended this week. You want to talk a little metals, maybe some crude, maybe crypto, ags, lean hogs, whatever's floating your boat. We'll talk about it, or try to here, on TWIFO. My name is Mark Longo, of course, on the oldoptionsinsider.com. You guys know how to get us by now. Every Thursday, 1:30 p.m. Central, live, or get it via your favorite podcast provider. You know the drill. And, of course, hit us up, questions, comments, insights, pearls of wisdom, maybe your own charts and suggestions for trading ideas and things like that and opportunities. We do love to hear from all of you. And even though it is the holiday season, I'm joined once again by my cohort, my partner in crime here, the founder of Bantix Technologies, creator of a little platform that we like to use around here called QuickStrike, Mr. Nick Howard. Nick, welcome back to TWIFO. Sir, how are the holidays treating you over there in Bantix land?
Well, there's a lot of red and green mixed around this stock market here as I look at my screen, so it's very Christmassy because the mix is leaning towards red.
That's a good way to look at it. I like that. Very. It's seasonal. That's all it is. It's seasonal.
Definitely a seasonal pattern, leaning toward red, bloody red.
Yeah, some might say blood red. You say seasonal. So I like your version better. A little more euphemistic. Yeah. I like that. Since you're an old school rates guy, and since the Fed was kind of leading the dance this week, let's start there. We don't get to talk rates a lot here on the show because it isn't always the sexiest of things, but things have been lightening up in that sector of late. And of course, again, this week, our old buddy, Mr. Powell there at the Fed, deciding to maybe look askance from what the market and indeed the administration wanted. Everyone was kind of hoping for or expecting them to pump the brakes a little bit harder with the forthcoming rate cuts, and they did. They kept the rate this time 25 basis points, and that's kind of what people were expecting. Nick, you can probably talk to that a little bit more in the when they get to the Fed watch, but what exactly the probabilities were going into the event. But yeah, everyone was looking for a little bit more dovish signals for 2019, and Powell kind of saying, the Fed dances to its own drum. And some like that, some don't. The market tends not to. And so particularly once the comments started coming in after and the question and answer period started coming in after, that's when the market really started taking a turn, when people realized he kind of drummed up the recent market activity as kind of a little bit of volatility. He didn't seem too concerned about that. And that, of course, has been the major question from a lot of people in the equity space. Hey, a lot of volatility. What are you going to do about it? And apparently the Fed decided it's not really their purview right now. So all that spooking people. And then, of course, today we have continued drama off that. And, of course, now the drama of an impending shutdown in the marketplace. So as you mentioned, Mr. Nick, a lot of red on the screen. If you're a gold head, you're happy today. You're getting a nice little lift out there, up 1%. But crude feeling the heat. Crude's off as a result of this. Everything's off. S&P and all the major indices. It's kind of a lot of red out there. So, Mr. Nick, you're an old school Eurodollars guy. What was kind of your take on this week? How it played out from a rates perspective? Also, you see anything interesting popping up on the old Fed watch this week, sir?
Yeah, I think a lot of people were watching what was happening, especially since our president had asked the Fed not to do anything because he thought that it would be bad for the stock market. And I don't necessarily know if that was the reason we're down, but I'm sure that has a part of the reason of why we pushed down so hard. But I don't think the Fed was not going to ever do this December one. They had it pretty much set in stone, and the futures market was showing that there was a little bit of sentiment move towards staying steady. So I think we moved. I think when the move was made, it was in the 70s percentage wise that the move would actually be made. But if you go out there and look, there's the next year or so worth of meetings out on the Fed Watch tool, and we definitely started to see a shift toward. He mentioned only 2 in 2019, and you saw that shift even prior to the news conference that there was the likelihood of staying put now with where rates are for the next year. So I think that I would have my guess was when they did the hike and then they said we're going to be a little bit more cautious with the hikes going from 4 that was built into probably just 2. I wouldn't have expected it to get hit as bad as it did. I thought it would have been, steady state to a modest rally. But, and then I think part of the hammering that we're seeing today, it might be the after effect of people reading them again, or even the fact that there's been tweets and news items about not making a deal to close the government, to not close the government, that type of thing. But the futures were up pretty much. The 10-year, the 5-year, those were up early in the week, right? We just were a steady climb up with the expectation that we weren't going to go anywhere. And I think the 10-year saw a little bit of support now with some of that rhetoric that we're not going to do too much going forward. Same thing with the 5. The short end of the curve, it come in a little bit, but it's kind of where it was. So I would expect that we're going to, sit tight here from a rate standpoint, unless things get really, really bad. I can't imagine that they would reverse. I just would imagine that they would say, well, we're not going to do anything, and that will steady everything as far as the market goes. But I don't know if all this market movement is in regard to that. I think a lot of it is, but a lot of it is just into the instability of our government in general. So that's kind of what I'm seeing.
A lot of macro playing into that right now. Of course, you have the shutdown. That's not helping. There was a decidedly more dovish camp lurking out there in the market who was expecting not only to pump the brakes next year, but also obviously maybe not even do it this year. And so they didn't get that, and they got less dovishness than they wanted for next year. So if you were in that camp, you were probably very surprised by yesterday's activity. I guess they weren't paying attention to the Fed Watch, Nick. The Fed Watch was telling them something else, but they had their own perceptions. We saw the 10-year yield fell to its lowest since late May, about 2.78% out there. Looking at the 10-year right now, you guys can follow along, of course, cmegroup.com/TWIFO, or log into your pro version over there, bantix.com, bantix.com. You can see all the reports that we're using here right now. I have the 10-year fired up. You can just fire this yourself, listeners. Go on over there to the top, drop down, go to U.S. rates, and then pick your poison. You can pick 2-year, 5-year. I picked 10-year, but the 2-year tends to move a lot with these things. As Nick said, we kind of saw some interesting action in the 10-year this week as well. Actually, most of the action out here, vol up, by the way, interestingly enough, vol up after the event in the 10-year, ever so slightly, not a huge bump, but still maybe showing that where the skew was lining up going into the Fed announcement. As we're seeing here, the big action this week coming in the Feb contract in the 10-year, actually. Almost not quite 250,000, 225,000 contracts on the tape for pretty much the lion's share of this week. Let's see when all of that. Also, 42% of this week's paper going up in that contract as well. So nearly half the paper in the 10-year going up out there in the Feb contract, which is actually at the front month. There's a Jan out there too. That did pretty decent paper, but it was out there in the Feb a little more, with the 122 halves coming into the showtime. We're at 121 and a quarter. So 122 halves, slightly out of the money calls there, with about, like I said, nearly 250,000 contracts. The lion's share coming on Tuesday with 93,000 going into the big meeting. Wednesday actually kind of quiet, only 22,000. Today nearly 40,000 on the tape. A lot of that opening, 109,000 of that opening. So a lot of opening near-term upside paper here in the 10 years. Ain't that surprising you, Mr. Nick, or see any other activity? It's kind of a mixed bag. You look at the 2-year, look at the 5-year, look at the 10-year. Obviously, you're a Eurodollar guy as well, so you can look out there. Anything kind of surprising you out here in the rates complex this week, aside from the decision itself?
No, I mean, I guess I just pushed you a picture for what the January meeting looks like, and even from yesterday, the expectations have really jumped. Now, that takes into account that we actually had the move, but there's even been a shift over the one day that there's going to be not that we're going to have less of a chance of seeing any more tightening. So, and you mentioned upside trading. I think right now the market, at least the tendency from my standpoint, would be just the way the market moved into the meeting when there was a general expectation what's going to happen. The fact that you said a lot of upside is trading, that we're seeing a little bit of a steadying of the rates in that 2 to 10 year area as it stands right now. And the Eurodollars, I think, again, just historically, unless something goes awry, we'll start to see that will maybe that front part of the curve won't be trading as much as it has been now that some of the expectation has been pushed out into the latter months. Because when you see this common sort of scheduled action, you see a lot of activity in the white months or that first year. And now if they start saying that we're not going to do too much, even to the point where if it starts to get to the point where we say, okay, we're not going to do anything in 2019, we might see a lot of that open interest and a lot of the trade shift out to the red part of the curve with those short-term, with the mid-curves trading as well. So that'll be, again, we just one day after the meeting, we have a shutdown to go through. We have a holiday. We have a Christmas rally, right? We have all those, hopefully a Christmas and a New Year's rally. So it remains to be seen. And probably the holidays coming at a good time to give everybody a little bit of a breather here for the next couple weeks.
There we go. All right. Yeah, you just shared with me the current targets there over there for the Fed Watch. Interesting stuff. Check it out, listeners, if you haven't gone over there. Just type in CME Fed Watch. It's pretty easy to find for yourself out there. We have a lot of stuff going on, Mr. Nick. We could probably talk rates a lot. We got to keep on rolling some other product categories here as well. Crude is an interesting one. Crude's kind of like Chicago weather these days, Nick. You don't like where it is, just wait 5 minutes because it's just kind of all over the map. It's selling off, it's rallying, it's selling off, it's selling off. Right now, we're in the midst of that sell-off. Some of this obviously exacerbated by the issues we're seeing out there with, of course, the Fed and, of course, the broad equity markets. It's all kind of just getting caught up, and crude getting caught up in that as well. As we're coming into showtime, WTI at the 46 level, off 5.5 handles on the week. That's a big move. It's almost 10, almost 11%. You don't see those too often out here in WTI land. So surprise, surprise, a big move to the downside. Puts already had a decent bid. Vol up strong. We were just all these articles the last couple of weeks about after the OPEC meeting, vol just got annihilated in across the board in a lot of the crude things and in things like the WTI VIX. This week, getting some of that juice back, getting some of that vol back. So if you were wringing your hands, perhaps saying, "Oh, woe is me, all the crude vol has gone away," you just had to wait a week. And the crude delivers yet again. In terms of, we saw a lot of mixed action because a lot of this is the equities continuing to weigh in, and the Fed. People are worried about these continued rate hikes kind of killing national or international demand, really, for crude. So that's kind of depressed crude a little bit. We also saw a lot of back and forth with the OPEC guys. There was a little bit of worrying about, are they going to actually spell out what kind of real cuts we're going to see, how everyone's going to actually do it percentage-wise. They actually did release some of that this morning. So that helped for a little while. And then the broad equities kind of came back in to kind of slap them in the old face again. So it doesn't matter what OPEC can say at this point. They can't really help crude catch it and sustain a bid. They can catch a bid for a little bit, but once they're done talking, crude seems to fall. And a lot of that is, again, due to lingering concerns over broad macro issues really weakening demand for crude. You got this trade war continuing, all these other things continue to weigh on crude, and that's what we're seeing out here. In terms of action, of course, in open interest was a good week, up nearly 5% here. Again, you see an 11% almost sell-off in WTI. You're going to see a big pop in OI, and we did see that this week. In terms of where the action was out here, number one with the bullet, nearly 50%, 49% of the options activity in WTI this week come in, again, in that Feb contract with the, doesn't it seem crazy, Nick, that we're talking 40 handle puts, and they seem like the 40 handle put is the number one option. Didn't that seem so distant just a few weeks ago? And we were talking in the 70s, and now here we are talking the 40 put, and it has a chance of coming to fruition. Doesn't that seem crazy?
Yeah, it's definitely feels like it's oversold, but we did give our 40 to 70, our Citibank 40 to 70 WTI range.
Yes, but I think I said 35 to be charitable. Yes.
Yeah, it does. It feels very heavy market here, and you hit but I think what happens is you hit these again, and I'm not trading it, I'm just watching it. You hit these levels, and I think people get stopped out, and then people get any longs. I got to be afraid to get back in there. So, we start to hit these major levels, right? These 50s, these 45s. And you and I talk about all the time where these interim strikes, they're there, but people don't think of them as being there, right? You're really kind of 40, 50, 45, 55, all those kind of things. So, to see it down 5 again this week, and today it's down 220. The interesting thing to take away from this, when we were higher, when we were in the 70s and we started to get that push down, the skew was really, much wider on the quick skew numbers, meaning the puts were way more bid and the calls were way more offered. And now it's almost like if you look at the curve last week to this week, it almost starting to look like there's a shift where it's starting to say, okay, we think we probably are down here, and we're going to start making this curve look more uniform. It's not quite. The calls are still offered and the puts are still firm, but the puts aren't as firm as they were and the calls aren't as offered as we were. So it's, people, they have to start worrying out in Saudi Arabia too, right? There's that article, I think, that came out that they need like $90 oil to survive as an economy or something like that.
Yeah, they're starting to threaten those levels
something
now.
Crazy. So you got to think, we're getting low again, and there's certain industries that can't survive at these levels. So it's going to be, I don't know. We don't put much out from a conjecture standpoint here, but it would seem like this, has to get some support around here in the 45. And if the 40s come into play, oh my gosh, I can't even imagine getting down below the 40s again. It's been a long time.
Imagine we have this one tweet tomorrow, right, from the president, and he says the trade war is over, and by the way, he's Powell's agreed with him, no more rate hikes, and everything's happy with the world. Imagine that one tweet, Mr. Nick, could turn all this around.
For sure. Well, you gotta wonder if some of this stuff is not said, so some of these corporate buddies can go out there and do their stock buybacks. I know a lot of them have submitted, but just imagine the savings on the stock buybacks at these levels right now. I mean, where things have come in, it's just incredible. Mark Zuckerberg, as bummed as he probably is, has got to be happy as a clam, because those guys put in like a $9 billion more request for a stock buyback. So he saved himself, hundreds of millions of dollars on this down move, because the thing's going to come back. You just wonder sometimes if things are said in order to benefit certain groups, and then things are said again in order to benefit those groups again.
I like it. You sound like the Rock Lobster on my other show, with a little bit of your tinfoil hat, your conspiracy hat. I like it. Injecting a little bit of a
nothing surprises me anymore.
So. Hard-bitten cynicism. I like it. Let's see what was I mentioned here. We're talking 40 puts. Where the action was. That's kind of where the action was this week. Feb 40 puts, 24, almost 25,000 on the tape. That's number one by a pretty decent margin. The next closest is about 20,000 with the 45 puts, which are now close to at the money puts, which is as crazy as it sounds. That's where they are. Number three, we see falling off a little bit. Not as much love for the calls. About 13,600 of the 50 calls. It was coming in at number three. Then looking here a little bit, then we got 55 and 52 calls, taking the 4 and 5 spot with about 8,700 and about 8,000 respectively. So mostly puts leading the dance, as you probably would assume, given this relatively, not quite unprecedented, but pretty exaggerated and exacerbated sell-off to the downside. 40 puts were kind of active, kind of across the board, all the way out to D's 2019. 40 puts doing about 4,000 contracts there. 45 puts lighting it up out here in July contract as well, with about 4,000 on the tape there. Worth noting, there were some calls a little bit farther out. We got the June 50 calls lighting it up, nearly 10,000 this week. So actually, I missed that one. That should be like number 4 on our list or so. So that would come in our top 10, actually, the June 50 calls. There were 50 and double calls were active. So it wasn't all puts, but it was the lion's share, shall we say, of puts. So fascinating stuff. Yeah, you're kind of right, Nick. It is interesting to see, OPEC keeps trying to talk this market up, and they doesn't seem to be sustainable. They get a little bit of intraday blip, and then something else happens, and it just kind of turns right around again. So you're right. Interesting things setting up, interesting opportunities perhaps in crude from a volatility, from a skew perspective. Fascinating stuff. Again, we can do the whole show on crude, but we got to keep rolling. There's other things happening now. That's one of the nice things and the dark things, the hard things about this show is it covers so many products, which is fun, but it covers so many products we can't fit them all into the show. Let's hit equities quick. Our buddy Sean also traveling this week for the holidays. He'll be back soon, giving us the update on all things FTSE Russell out there. Equities land, we saw coming into Showtime a market bid to equity volatility, as you might imagine. Coming into Showtime, VIX cash, S&P volatility is about 28 and a quarter or so. RVX, which is, of course, the VIX of the Russell 2000, at about a 31. So you're seeing not quite a 3 handle, about a 2.75 point spread between the two. So that's a bit tighter than it was last week. It was about 3.5 points last week. But VIX moving, RVX moving, Russell vol, everything's moving kind of across the board. Interestingly enough, right before Showtime, Nick, our buddy Russell Rose, who was on the show a couple weeks ago from Tab Group, he did some analysis on a trade that kind of caught his eye, actually, in the Russell 2000 options, and he did a nice write-up on it. You could find it, of course, over there if you're a member on tabforum.com, or we can break it down for you here as well, save you a little bit of time. But I do recommend you check it out over there. Russell does good work over there, and he highlighted, Nick, kind of interestingly enough, what looks like to be a straight-up upside call sale in the Russell 2000. It was the Dees 1405s lighting it up. It was 100 lot, which doesn't sound like a lot, but Russell 2000, doesn't print a ton of paper, so 100 lot is actually a pretty decent size contract out there this week. The Dees 1405s for $7.50. It went up not too far. He viewed this as very much a Fed play, and it seems like that's what it was. It was executed in the morning. The Russell 2000 was the futures hovering right around 1384 at the time, so it was a decent, about a 20 handle out of the money call right here. Now, if you know options and you listen to this show, hopefully you do, selling calls by themselves can be a bit of a risky game, but a little bit better than selling a future. You get a little bit more cushion in there. And that's kind of how Russell was viewing this as well. He liked it a little bit better than selling the future, even though the future would have done better in hindsight here. And this was done just not too long before the FOMC announcement, so it made it a bit of a risky proposition. If the Fed came out with their more dovish stance, we would have seen the markets probably rally, and this trade probably would have been in this guy's face pretty aggressively. He also thought the choice of the Russell 2000 versus the S&P was kind of interesting because if you look at the numbers, Russell 2000 has been pretty beat up this year, even more so than the S&P 500. At the time of that trade going in, the S&P 500 was down about 12, almost 13% for the year, whereas the Russell 2000 was down 18, almost 19% for the year. So he was taking a decidedly bearish stance on an index that's already been beaten up and been beaten up a lot more than actually the S&P. But he liked it. The vol we talked about before, vol up there was kind of elevated, and that was certainly a feather in his cap for this trade. And actually, we don't have it still open as of showtime here, but it looks like this one's working in this guy's favor. These calls they got up to $12, got a little spooky for a while, and we sold them for $7, but now they're coming back off. So they're offered at about pretty much almost worthless, 60 cents. So he could close out the whole thing for a pretty decent on profit if he was so inclined. Mr. Nick, I know we're not big fans of naked writing calls here because of all the unlimited risk to the upside, but kind of an interesting analysis for him looking here at Russell 2000, and people obviously taking advantage of the options out there. Maybe they're a little uncomfortable to do it in the futures. Maybe they just didn't want to deal with that hassle. For whatever reason, he chose to write it in the options instead, and it seems like it worked out for you. Are you a fan in general of this? Doesn't look like an override. It looks like pretty much a straight up spec short call play. Are you a fan of this, or you prefer more kind of risk mitigated, do the vertical, sell the vertical, or perhaps do it even covered kind of thing?
Well, first of all, I probably am more comfortable doing a call than the future to start. Secondly, the vertical is always an option, right? But I even probably think that they could leg into a vertical, right? Sell it and see what that seems to be a way to get a little bit more edge, right? So if you're right on your first sale, or if it goes in your face, you have a few more options. No pun intended, in terms of how to cover yourself a little bit there. Yeah, I saw that write-up. I was looking in the thing. I'm like, didn't it just shorted a call? And I guess it was a little bit risky going into the meeting, but at the same time, it's you can short a call. It could go right towards that call, and you could make money even if vol comes in, right? I mean, that's probably part of what the thinking was too. I'm going to short it, and if something happens, it goes down, I'm going to make money on the move down. But if I go towards that call, it's going to get hammered, right? From a volatility standpoint, it might go through even, and I still might be doing okay from a directional standpoint. So yeah, I mean, obviously, I think, although I'm looking at some of the stuff that I've done over the last couple of weeks, and I'm not necessarily sure what works best at this point, but that one, yeah, I think the bias is a heavy market, right? So a short call feels like it's a lot safer than the outright futures, at least from my perspective.
Yeah, if you're spooked on that, then obviously the call has a little bit more cushion, a little bit more volume. Still, if things explode to the upside, you're still going to be wearing it, obviously. But at least, that's certainly maybe a preferable way to go. And certainly, obviously, allows you to take advantage of things we talk about a lot on this show here as well, like elevated skew, elevated volatility. Makes that usually a more favorable trade often than the future in and of itself, particularly from a short perspective. Mr. Nick, we got a bunch of other categories we can touch on. I'll let you go in the driver's chair. I know you like your precious stuff. You want to go shiny. You want to hit on something else? Ags, what's floating your boat, sir? What came across your radar? What were the quick strike users slinging hot and heavy this week?
Well, I think my rates guys obviously were paying a lot of attention to everything that was going on, and just with that, but I think we covered that pretty well. I mean, the one that kind of snuck up on me, because I was watching, and it kind of bounced a little bit lower, and then it came back pretty strong, was the gold. So that had an interesting ride. What do we got? I'm going to look here for the 5 day. So let's talk about that. I'm going to look at that 5 day. Yeah, because we kind of moved up pretty good into Wednesday, and then we came off a significant amount on Wednesday. I keep thinking today's Friday. So we were up pretty good, Friday, and then we came off quite a bit on Wednesday after the fact, and now we're right back and through where we were. So, we were talking 2 shows ago pretty much about what we thought the range was, and we're starting to push towards that towards that high side of that range. So it'll be, I mean, it makes you, I think it's comforting to some extent that gold is rallying when the market's sort of acting like this, because then you feel like it's a store of value is sort of being reinforced, right? Because I think we discussed even that thought being lost because it was just sort of wallowing around in this. And so I think we've pushed outside this range for the most part. In 5 days, we're up almost $30. And if we go out more than that, if we let's look at a couple weeks out, it's about where it was. So, I mean, 1240 to 1270 over the last couple of weeks, pretty good range for trading, like we've been talking about. But let's see what they say here. Let's take a look at gold and see what we find from an upside call perspective in terms of what's trading out there. So you want to do the rundown on that to see what we got?
Like you mentioned, gold having a good run this week. You guys can find it for yourself. CMEGroup.com/TWIFO or go to Bantix.com. Click on the metals tab in the drop down. Click on gold. You can follow along what we're doing right here. You'll see gold on a nice run up about 2%. You're right, Nick. It is kind of reassuring, certainly to the gold bugs out there, to see gold kind of doing what it's supposed to do, right? And if it wasn't doing this in this sell-off, then you might be saying, wait a minute, something's really broken, something else is wrong. So to see gold kind of getting a nice resurgence when everything else is selling off, it's kind of the point. So it's good to see that it's getting a little bit of this lift. Right now, like I said, coming into Showtime right now with the 1265 handle out there in the futures. Decent week for OI, up about 3.3%. We're seeing here the lion's share of the activity. Upside week, upside calls kind of leading the dance, as you might expect. Nearly 16,000 of the 1260 calls going up here in Jan. So nearer term, these are going out next week, listeners, or just about 6 days, with about 15, almost 16,000 on the tape. A good, pretty steady clip throughout the week, about 5,500 on Monday, 2,000 each Tuesday and Wednesday, then another 6,000 today. Again, today's sell-off probably exacerbating, plus post-Fed, a little bit of a combo of the two, lighten up the tape here. About only net 1,600 opening, but again, we don't have today's numbers in that, so we'll have to wait and see on that. Number two, the 1280s. Also pretty active, a little bit more out of the money, but not too far out of the money given this week's run. Pretty close now. 1280 calls with about 11,300. The lion's share coming yesterday. I would have expected more of that for the 1260s as well. The big pop coming yesterday, but we got the big pop today, which is kind of weird. And 1280s that came yesterday, 8,500 of that. The rest of the week kind of anemic, only 1,700 on the tape today. About 1,000 of that opening, so a lot of back and forth on the 1280s yesterday as well. Then we fall off a little bit again. Number three, the 1300s, kind of a nice little upside call strip. 1260. 1280, 1300 call strip, 1, 2, 3, all of this in jam. 10,300 of these lighting up. The lion's share again yesterday, 43, 4,400 yesterday, almost 3,000 today. So not quite as quiet of a day in the 1300, which is interesting because these are out of the money and they're going out pretty soon. about 1,000 of that net opening on the week. Let's see. Other than that, so let's see a little bit of put action. Let's go out here really quick. Let's jump around. I like to jump around a little bit. 1270 is also getting some love, 7,400. So yeah, nice, pretty much a call strip here in the front month. Let's look out here a little bit just to see 1,300 calls in Feb, also getting some love, about almost 5,000 on the tape this week. Slightly biased towards open, but a good chunk, almost 3,000 of that going up today. So again, those OI numbers a little bit misleading. You got to look pretty far to get some puts that are really dominating it. 12 half puts doing about 2,300 in there in Feb, and the Jan 4,000 of the 1240 puts did light it up this week. So you got some puts lighting it up, but it's pretty much all calls all the time, which is kind of what you'd expect, Mr. Nick, right? The gold bugs have been waiting for this week, and they got it, and they're coming out to play this week, sir.
Yeah, I mean, that is true. I also go back to Wednesday with a little bit of good news, right? I think, the timing of that move down of $15, right? What was that about? That was, let me look at this too. I want to see this just to kind of make my point. Go to the 2-day and see. So yeah, around 2 Eastern, that's when we had our big break. So it was right around the meeting, right? So they tightened, and then they're waiting for, so up here, I'm watching the market here, and it's bounced a little bit, right? It was a little bit uglier a half hour ago. It's bounce is the wrong thing. It's less horrible than it was. So you would think that there's maybe some opportunity up here if you feel like we're trading 12.65 right now. We traded down to 12.45 after the meeting. So there may be some opportunity here to play a move back in the other direction. So that's kind of like what, again, I like looking at the ranges and trying to trade those. And the calls are pretty firm right now from a bid standpoint. So I don't think you're going to get anything that's tremendously cheap. But at the same time, when you look at them relative to where the monies are trading, they're not that much more expensive. So maybe a vol more expensive than the at the money. So if you feel like we're might get some good news or any good news, you might be able to buy some calls and hedge them and play the market to move back down toward that 12.45 mark, or buy something up a little bit higher, 12.75 or 12.80. I don't even know. I got to look and see what, in the February, get something that's a 15 or 20 delta that's out there, maybe even a 25 delta, and play that potential move down. If we get some good news, gold will come off, especially being up $10 today, because that $10 was kind of snapped up there. And if we see the market pull, get a little bit of a run higher, I think gold will come off, and you get a chance to play this range, do a little scalping.
You're quite the scalper in gold land, sir. I know that's your favorite of the markets these days. How did you become such a gold connoisseur? Is it just you evolved from rates, or what is it that really sparked your interest in the shiny stuff, sir?
Well, I think I don't know. I just learned more about it, and I like the range. I like the way the range trades, and as much as it moves, it does move within its range. So it's not like it's just going to go to 2,000, right? It's going, there's going to be some precursor to some really bad stuff happening. So I just feel like it had a good range, and it just feels comfortable, and it seems manageable to me from a scalping standpoint. And I was in the Eurodollars, and you got the scalp, but a lot of times you were very unidirectional. It would be something was going on, and it was going to continue to go in that direction. You might get some pullback or some pops, but generally speaking, you were moving one way. But gold seems to be like it flutters around a little bit, so it seems like a real tradable thing.
What else is tradable and what else is actionable? Certainly are your questions, comments, and emails. We got a bunch of them, so let's get to them with some of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. We like to try to deliver you a nice, tight show here on TWIFO. So Nick and I can keep going on about all the product categories we want to talk about. You guys have your thoughts, too. So we thought we'd hit on some of those, let you guys kind of take the reins here a little bit. Mailman Dan 5. Apparently there were 4 others, but Mr. 5 hitting us up saying he's a crypto guy, I guess. He says, I'm a buyer for crypto. This is back, I think he sent this a few days ago, back when it was still in the doldrums. By the way, crypto today, and Bitcoin in particular, feeling the love. The Bitcoin futures up 330 handles over there at CME. So breaking back through the 4,000 level to the upside, 4,025 as of showtime here on the front contract, the D's contract, with about 4,000 contracts on the tape. So pretty aggressive day up there. Crypto getting some love. He says, I'm a buyer at 2250. Well, you and probably a lot of others, I would think, he says, I know the crypto market all too well. If it wants to fiddle down there, I'll play ball. Else, it's not a great time to get back into crypto. Hopefully, too many people didn't waste their time on 2018 on what was clearly a 2017 boom. Well, maybe not so much if today's numbers are to be believed. And this also, Nick, kind of, people have poo-pooed it a lot, and it's kind of been disproven by the correlation data. But people always were talking about crypto is kind of the digital flight to quality, right? The digital gold. at least today it's doing that, right? It's giving you a nice pop to the upside. This guy also chiming in on gold. He says gold, I think this must have come in a little bit earlier because these things are moving opposite now. He said gold is rising now that Bitcoin is falling. Little switch up in store of value happening here. Any bigger investors that decided to take the crypto plunge, still playing it like it's a stock, it goes down enough and then pull out and reinvest elsewhere. I don't know, Mr. Nick, what do you think about, of course, you haven't had a chance to talk. It's been the kind of crazy times in crypto the last couple of weeks, right? They got a huge sell-off, and then today at least, big pop. Anything catching your eye out there? And what do you think about our friend here? I think he wants to buy at 22.50. How nice would it have been to have some puts at that strike, huh? You could sell some puts at that strike. How great would that have been?
Oh, yeah. Well, I don't know. I'm trying to look back and to see how far. I mean, look back 3 months and how close we got to that. I'm looking at the futures right now. I mean, the lowest we got in the futures was 31.26.
Yeah, it was low 3,000s. Like yeah, so that strike wasn't quite.
I mean,
play.
yeah, of course. I look at those comments. They sound. You read them very confidently, right? So you're reading them like there's a lot of confidence behind that. But the market was pretty ugly for a while, and the pop was taking place over the course of the last few days. I don't think it's just today, because if you looked, I have my little alerts on my phone. And you were seeing a lot of the coins were up 10%, up 10%, up 10%. And I think, again, I'm still not 100. I mean, with all the news that you're reading, now you saw another exchange is going to start having physical delivery of coins, right? That news just came out. You see how great the volume is on the CME with the 4,000 contract, which is 20,000 coins. That's tremendous. And as you get a higher price, the notional becomes higher and higher on that. I'm still not 100% sure of how much we still have our stuff with crypto in there, but it's hard to jump in with both feet still. And the one good thing of this last couple months with it, and I think it's more so, I mean, we're really hammered. I'm looking back here, we really started to get hammered in the beginning of November and come down really hard, lost 50% of the value almost November to the middle of December, and then back up here. So again, it's one of those things. Is it a store of value? I don't know if it is yet. We just said something in gold, how it has a range and you're comfortable with that range. So that seems to be what a store of value is. And there's going to be something that's going to happen to make it move higher, but it tends to be a general economic thing. This one just doesn't feel like it yet. And my point being is that at least it looks like a lot of the coins found their base levels. Like when you look at the smaller ones like Ripple and Litecoin, they seem to be in an area where, if they may be low, but at least they have a value, and that value is consistent. And if there's something consistent, you're going to want to pay with it. If you're going to use something and it's 30, 34 cents, 35 cents, and the next day it's $1, you're going to feel really horrible if you spent that, a 34-cent coin, and now you could have bought 3 times as much when it was $1. So I'm still not sure. And a lot of these crypto guys, if you watch some of them on Twitter, and again, I don't know who this guy, who the listener is, but I don't know. It's easy to talk about it after it's moved up. That's how or after it's moved down.
I think a lot of people probably would be buyers at 22.50 sure. at that level.
Well, the one interesting thing a guy I know in New York who I see every time I go out there. He's a crypto trader, and he told me that he can't trade it from the short side. They have to trade it from the long side. So he can't sit there and put an offer to sell it on these exchanges. He can only buy it on these. He can only buy, hold, and move, and then sell it stuff that he owns. So to me, that's interesting because. And I didn't realize that at the time, but yeah, as the market goes down, you get a lot of people on the sidelines, which means if a lot of these traders can only trade it from the long side, they're going to stay out of the way as it moves down. So that might exacerbate the moves down, right? But you see the markets when it's up 10% and they can make 10% on a move or 20%. Now you see that there's people getting in, they're buying, and then going up and they're selling. So there's more back and forth. So I think it's a healthier market if it's moving up, because then you get people trading. But if it's going down, I think people put their hands in their pocket and not going to do anything.
Yeah, I think there's definitely a lot of that. There still is that mentality in some of these, especially some of these other venues outside of the big listed futures venues where you're right. You can't, it's difficult to exit some of these positions. But yeah, if you like this kind of stuff, listeners, you want to get a little bit more of a meaty bite of the apple on all things crypto, the futures, the underlying, the options that are going up OTC. There is a decent market for those as well. Stay tuned. We're going to be breaking all those down with a new show coming in January. breaking down all things crypto. First week of Jan, we'll give you your taste of it. We've been waiting for a while to see how things play it out. It's kind of interesting what's going on out there. Today's resurgence certainly is interesting. A lot of volatility, a lot of things to talk about. So we'll do a big meaty dive every week coming soon in all things crypto. So join us for that. All right. Meanwhile, we've got who we got? Oh, your old buddy Giorgio here chiming in. We didn't talk currencies, but they're also moving a bit this week, obviously with the Fed. Euro USD in particular. He's saying, of course, we have Brexit issues looming over there as well. He's saying volatility in the Euro USD futures options has dissipated since the beginning of December, making out-of-the-money puts very cheap here. At the same time, out-of-the-money calls are getting richer. Time for a quick risk reversal. And he included a chart from a platform you may have heard of, Nick, called QuickStrike. But yeah, Giorgio, formerly of Saxo Bank infamy, saying he set up for a risk reversal out here. I just pulled it up myself to look at what's been going up out here in Euro USD this week. Strong OI week. OI up 16% out here. Vol kind of a mixed bag, as he kind of alluded to, kind of across the term structure, kind of moving around, but kind of net vol unched. But he's right. Skew is kind of an interesting bag. What was he talking here? He was looking at the...
he was looking at the... Yeah, when I look at the vol curves, they look pretty uniform from a smile standpoint. But what does he say? He goes, out-of-the-money puts very cheap at the same. Out-of-the-money calls get richer. So again, it depends what he's. I'm looking at the regular strike-based curve, and they look pretty reasonable.
Yeah, I'm not seeing entirely what he's seeing here. I'm just looking. He picked a contract. He said the Jan. I think he said Jan.
Yeah, he said the Jan, but I don't know when he posted this.
Posted this like this morning.
Yeah. So I know Giorgio pretty well.
Yeah,
so he knows what he's talking about.
To get him on and say, "What are you talking about, sir?"
Yeah, well, he must mean just from a general directional economic standpoint. I don't know if the vol is necessarily stating that as much, because it looks pretty indifferent from a vol curve standpoint. But he must mean from some perspective that if the out of the money puts very cheap here, maybe they're cheap in comparison to the way they've looked. If I come, let's take a look and see what the quick skew says for these of late, and then maybe there's a little bit more color from that standpoint. If I look at the 30-day.
Yeah, I'm here. I was looking. I thought I was missing something, but I'm not. I'll have to ask him what he was referring. He put the chart in. I mean, the chart is there. But I'll have to reach out to him. Say, I like the suggestion for product categories. We like that on the show. We don't talk a lot of FX, so that's give us a little excuse to do that, which I kind of like. But yeah, I'm not exactly seeing the skew setup that he's.
They're right on top. They're actually as balanced as they could be, pretty much at this point. So, and that's on the 30-day. I'm looking at the 30 days, but I'm looking at the Jan. It's the same thing. But what is the Jan? How many days does the Jan have left here? The Jan has 15 days left. Yeah, so it's right in the middle. No, I'm not sure. I mean, I think that's the FX looks. The euro looks as indifferent as it's looked from a volatility standpoint that I can tell at this point, just looking at the vol curve. So, I mean, last week it looked a little bit like the calls were offered in comparison to the puts, but this week it looks like it's pretty much, I think you're looking at it yourself. So, anyway.
Yeah, so interesting. Thanks for the suggestion, Giorgio. We'll have to get him on the show. He could defend himself in person and say, no, I was actually speaking of something else. Interesting stuff. Since we're heading into the holidays next week, Mr. Nick, let's wrap it up on a positive note. We got a comment from a frequent listener, Austin41. He listens live. Says, good shows today. The experienced and animated host makes it very entertaining and interesting to listen to. Well, this is clearly, Nick, a man of discerning taste. Animated, I like that. I guess I sometimes I gotta get up for the shows. You got to get things rolling. Mr. Nick, you got to wake him up for this coffee a little bit with the show. Got to get the ball rolling. But I appreciate the love, Mr. Austin, and we appreciate all of you out there who tune in every week and listen and send in your questions, send your product categories. We got a bunch more, more stuff about WTI skews, about Brent. People have Brent WTI questions, seasonal stuff in corn, all kinds of fun stuff. Cattle futures. We'll get to more on the next show, listeners, because we got to keep on rolling here. There it is. There's the music. The music come to. I said we're trying to keep you a nice, tight experience here on TWIFO, somewhere around the 45-minute range. maybe a little more sometimes. So many products. Quite frankly, the show could be 3 hours with all the products you guys want us to cover, but we try to condense it. If you guys have a question or a specific product you'd like us to cover on the show, like a bunch of others did, like Giorgio and Mailman 5, whatever the name was, and a bunch of others, hit us up. We'll try to work them into the shows. A lot of the big ones that you guys always want every week, so we try to make sure we play those, but also if there's some esoteric ones you'd like to see us hit on there, let us know. Sometimes we're in the mood. You never know. So hit us up. You guys know how to find us. Mr. Nick, if they want to find you and see what's cooking in the land of Quick Strike, where should they go? What should they do, sir?
What's cooking? You can always go to Twitter and message us at Quickstrike at QUIKSTRIKE1 on Twitter. You can find us at Bantix, BANTIX.com, and just shoot an email there, or just register for some of the free tools, or you don't even have to register on the CME. There's a bunch of free tools out there, or you can register for the free package Quick Strike Essentials, or you can register for a trial of Professional Edition, which will be coming out with special pricing at the end of the year, so stay tuned. We're going to start offering some annual contracts so you can pay in full and pay an entire year Quick Strike for what it costs, less than what it costs for 1 month of Bloomberg. So that's something to consider as well, and you get all the tools. So it's out there, and there's good stuff that has come out. The Fed Watch has been super popular that we wrote for the CME. That's up there, and we saw it. We were laughing. It got mentioned in the link got put in a Bloomberg article. So go out there and take a look at those tools. There's lots of tools out there. There's going to be some reorganization on the CME side as well to organize them in a more educational format in terms of how you start looking at a product. So, there's open interest tools, volatility tools, product level tools, block product, browser tools, cost analysis tools. So go out there and take a look, because you're missing something if you're not using them and you're trading futures options.
That's like I've been saying since day one of this show, right? I mean, if you're trading these things and you're not using Quick Strike, I honestly don't know how the hell you're doing it. I mean, Bloomberg, that's a good point. Say you save a ton on this versus anything, and Bloomberg doesn't have this stuff. Trust me. We look at all the different platforms there all the time. When it comes to futures options, that's why I like your tagline there, Nick. All the stuff you can't find all in one place, right? Because it's true. Quickstrike.net is the place to go. Bantix.com. You can also go, or cmegroup.com/TWIFO, and you can check it out for yourself. Kick the tires and then light the fires. And if you're trading this stuff, I think you're going to want to use the old Quick Strike platform. Of course, while you're surfing around, head on over to our friends over there at CME Group. As Nick mentioned, they got a bunch of great tools. The Fed Watch, OPEC Watch, when that time comes around, a bunch of other great stuff over there. Check it out, all their educational stuff at CME Institute, as well as all the research from Blue and Eric and the rest of their research team over there. So if you want to check out maybe some new product categories you haven't thought about and look at some research and some setups, that's the place to go do it. And of course, our buddy Sean will be back soon with more tales of his global traveling here on behalf of FTSE Russell. In the meantime, you can check out all of their great indices, maybe some more analysis that Russell and his team are doing at Tab for some FTSE Russell options trades, all the great benchmarking stuff they do, active versus passive, all the call overriding analysis they do, all that kind of stuff. FTSERussell.com, FTSERussell.com is the place to go. Give them a follow over there on Twitter as well, at FTSERussell.com. Tell me you want RVX back. They'll like to hear from you. And of course, on behalf of Mr. Nick and Sean and our friends at CME, and indeed myself, I want to thank all of you for downloading, streaming, subscribing, sending in such great questions. We can probably do all questions. Maybe we'll do that next week. A holiday all question show. That sounds kind of fun. So maybe we'll do that. Put that in the hopper for next week. And we'll see you next time for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.